Hello?
Yeah, I'm asking, do you play games as well?
Yeah, yeah, I play games, but
All
not
right.
FIFA.
Ah,
Yeah, but I really, but play on console, so
ah.
yeah.
I hope you can see my screen.
The points went away. Yeah, I can see your screen.
Okay. Uh, so have you opened any trade since the last time?
No,
You should
not
try and
really.
open more trades based on just support and resistances. What we did, just you draw your lines. If it breaks
Mm,
it,
yeah.
if it bounces off it, but you should look for bounces. You get me? Yeah, you should look for
Okay.
bounces to
Yeah.
trade off.
Yeah.
As I was saying, so remember the 50,
Yeah.
61, and the
And
78.
then
Those are the points that
78.6.
you should be very interested. You should look at for. You
Look
should
out
look out
for.
for. So once you know that
All right.
those are the points that you should look out for. The next thing you should do is you wait for those points to for the market to get to those points. Those are your points
Okay.
of interest. That's anytime
All
you
right.
trade. Those are your points of interest. Let's see. All right. So that remember I told you that the truth is you can never know whether it will bounce off or
Yeah.
not.
Or not.
Yeah, you
Yeah.
can never know, but you can always bet on it. You get me? That's you work in
Yeah.
probabilities. Uh-huh. If I know that this is a trend, see this uptrend here.
Yeah.
I'll not bet on this that this will have a reversal right at this point. Do you know why? See these two strong candlesticks. Why should I
Yeah. Yeah.
bet that there'll likely be a reversal at this point? I'll not do that. You get me?
All
So you
right.
look for areas
Yeah.
of interest, and one of the areas of interest is the 50, some of the 61.8 and the 78.6. You
All
can
right.
add all these ones, 100% and all that. But these are the point of interest that you should look out for. There are more, but yeah, there are more. I've mentioned only three here, but you can add the rest and always look out for them. Now, once you take this as your point of interest, you can use a candlestick
Yeah.
pattern to confirm your entry. You get me?
Okay.
In this case here, we have two candlesticks here. Thus, we have a green candlestick followed by a red. You get me? And it forms a pattern. If you look at
Mm-hmm.
it clearly, it forms a pattern here. Let me zoom in and let's see. It forms a pattern here. I hope you can see that it closed um, below the opening price. You get me? Uh-huh. Now you can also see that before it got there, it struggled a bit. Don't even look at the struggling. Just use a candlestick pattern. And this
All
candlestick
right.
pattern is like a bearish or a bearish pattern. That's a bearish engulfing pattern. I hope you have heard of it. Bearish
Yeah. Yeah.
engulfing
I
pattern.
saw some slides.
All right. All right. So once you have this pattern here, you can go in knowing that the 50%, there's always a high chance. There's a high chance that at the
All
50%
right.
spot, you will have a reversal. So based on
There'll
that,
be a
you can place
reversal.
your
Yeah.
sell at the close of that candlestick. And you see, it worked out well. You get me?
Yeah.
And the
Yeah.
points that you should take profits are also the same lines, the same points. So this would have been a point that you can take profits. This is also another point that you should take profits. The best way to take profit when you are using this Fibonacci tool is you place your profit a few pips above that point. You get me? If you
Okay.
decide that
All right.
for this
All
trade,
right.
if you enter here, you're going to take your profits somewhere close to the 68.2. You should take your profits somewhere
Okay.
above it. You get me? And the reason why you do that is you
Yeah.
have to consider those who don't draw the same way as you do. It's a common it's a common
Sure. Okay.
it's a common tool that most traders use. Most professional traders, they use it. But the
All right.
problem is people draw it differently. It's subjective. You get me? It's subjective.
Yeah.
Uh-huh. It's highly subjective. Everybody has way of doing things. So why don't you consider those people and always place your take profit a few pips above the line? You can place it somewhere about 10 pips to 15 pips above it. Because I've experienced it a lot of times. I'm in a trade based on this one. Then it comes
Yeah.
close to my take profit, then bounces back. So you should, yeah.
Bounce it back. Oh.
And I'm not around. You see that? I'm the type who can place a trade this week and close it next week. I've done that a lot of times. So let's say
Oh.
I don't check my trade for today and it just gets close to my take profit and goes back. You come back and feel very, very sad for yourself. You may even kick yourself for not being there to close it. So yeah, to avoid
Yeah.
that, just place it above it. You can take a couple of pips off. It won't kill you. All right. And so you see, this was another bounce. This was another bounce here. That's
Yeah.
why when it comes to these kind of things, I don't like trading breakouts. I'm not a breakout trader. That's the truth. I don't trade breakouts. I trade bounces.
Breakout trader.
Yeah. I trade bounces. I look for a point where price is likely to bounce. And usually when price is likely to bounce, there's going to be a little fundamental shift. You get me? The fundamental shift can be good news on the part of euro, good news on the part of euro,
Okay.
yeah, or bad news on the part of US dollar. So the euro takes it as an advantage to move to reverse. Hope you can see this reversal.
Yeah, I can see
Yeah.
that.
So what you need to look out for is I trade for bounces. So this was one bounce you could have traded and it paid off even if you took your profit here. If you took profit here, and when it comes to the
Yeah,
stop
nice.
losses, the stop losses too is subjective. But always try to place your stop losses to you should place your stop losses 2 times of the ATR. I'll talk of the ATR later. I will talk of indicators. When we get to indicators, I'll talk of the ATR. So we have 2 times of the ATR, or you try to place it 1:2 in terms of profit target. So if I have my profit target here, my stop loss it will probably be somewhere here. You get it? If I have my take profit somewhere here, my stop loss will probably be somewhere here. Remember, 1:2. But you have
That's
to
loss
practice. Yeah.
profit.
Hello?
I said the 1:2 is losses to profit.
Yeah, loss to profit. Yeah. Or you can call it your risk ratio. That's you risk 1 to make 2.
2.
Yeah. So you see, a lot of these things are subjective. But if I'm going to trade this pattern, I'll first of all go back and look for. I'll go back and look for points where the price struggle to break through. You see these points here.
Yeah.
You see these points. Yeah. You see these points here. You can see that there was a lot of buyers who pushed prices up.
Yeah.
Then I'll still go backwards and look, and you see this candlestick. See this candlestick here. I hope you can see this.
The long.
Yeah, the long one. So I would like to place my stop loss somewhere above it.
The very long wick.
Yeah, long wick.
Yeah.
So I like to place my stop loss somewhere above it. So somewhere here and here. So I'll trace and look for those points. I tend to use support and resistances for stop loss. Wow, that's too far.
All right.
So let's look for another interesting point. I hope you guys this is also another interesting point here. So
yeah.
Somewhere above it here, or just at it here. So my stop loss could have been here or here. But if I'm placing my stop loss here and I'm entering at this point, you see that's about 44 pips, or let's say 45
Okay.
pips. It's 44.9 pips. So 45
All right.
pips. So I'll be looking for a profit 90 pips. 90 pips, that's somewhere
Okay.
here. You see, that's right around
Yeah.
23.8. So you see, it's a very good
Yeah.
ratio. That's a risk one, I risk about 45 pips to make 90
Get
pips.
two.
You get me?
Yeah.
So this would have
Yeah.
been my stop loss. This would have been my stop loss, STP. And here, right here, would have been my take profits.
Take
One of
profits.
the things about trading is that you can never take everything from the markets. You have to leave some scraps. Anytime you leave, there'll be scraps
All right.
on the plates. So you don't be worried
Yeah.
when you are leaving
Yeah.
about 10 pips, 20 pips, or you
Yeah.
take your profits
I
here,
understand.
then the market comes down further. Yeah, you're like, nah, I should have closed somewhere here. You can never do that. Even if you do
I
that,
understand. I
it's,
understand. Yeah.
there are some
Yeah.
occasions that you miss it, and you rather pay heavily for your greediness. You
Yeah.
get me?
Yeah. Yeah.
Yeah, the
I
market will punish
understand.
you for being greedy.
Yeah.
It has a way of doing it.
Yeah.
Yeah. So don't be too greedy. Just know where you want to take your profit and stick to it.
Yeah.
I'm not
All
saying
right.
that sometimes you can not take more profit from the table, but don't make it a habit
Yeah.
that you are supposed to take profit at this point here,
Yeah.
and
Yeah.
you decide to push your take profit further to this point. No, 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 don't do that. If you are going to do that, then probably you should use your stop loss. You should probably push your stop loss to this point here.
Okay.
Then now push your
Okay.
take profit to somewhere here.
Downwards.
So
All
that even
right.
if
All
the
right.
market reverses, you are protected. You see that your profit is protected. That's what you should do. But you should not like
Yeah, bro.
push your take profit here and your stop loss is still hanging somewhere around here. Do you get what I'm trying to say? You should protect your
I understand.
profits. Yeah,
I
protect
understand.
your profits. It's
Yeah.
very good. You should take some profits from the market. It will give you um that's encouragement, that's confidence that you can make money from trading. If you keep
Yeah.
on leaving money on the table, let me say, when I say
Yeah.
leaving money, that's you don't take your profits.
Okay.
Consistently do that and you make losses. After a while, you have what we call uh confidence. You lack confidence. At one point, you lack confidence. You get me? It's just like
I
playing
understand.
anything at all. If once you are good in something, you develop confidence in it. But if you
Yeah.
fail
Yeah.
to win, that's you keep on losing. Your confidence will drop.
Yeah.
Yeah.
Bro,
So you
that's
need to
true.
win.
That's
You
true.
need to win. So always take some
Yeah.
profit too. It's
No
important.
matter how little.
Yeah, yeah. Take some profits. It will help you.
Yeah.
To help you along the way.
Thanks.
All right. So let's go back and see points that we could have made money using Fibonacci tools. So remember, you always look for swing high and swing low. That's on your chart. So
All right.
let's delete all this. We have a clear chart now. This is what we had. So let's go back to history again. I'm looking for swing high and swing low. So let's take this point and that point here. So on our chart, this is what we probably saw. This is a point that you can take. This point here.
Okay.
So I'll draw from the lowest to the highest. You get me? If you're in an
Okay.
uptrend,
You always do from lowest to highest.
yeah. If you're in an
Okay.
uptrend, lowest to
You draw
highest,
from lowest
downtrend,
to highest.
highest to lowest.
Highest to lowest.
Yeah, you remember from
Okay.
this one, I
Okay.
started from here to that because I was in a
From the top to
downtrend.
the down.
You get me?
Yeah.
If I'm in a downtrend, I take from lowest to highest. If I'm in an uptrend, highest to lowest.
Okay.
All right. Can we continue?
Yeah, bro.
Yeah. All right. So once I had this clearly drawn like this. Remember, I only drew it when I knew this is what I had, and I drew it to get this. You get me? Uh-huh. This
Yeah,
what I
yeah.
use. This is what I use in making my drawing right here. What we have here.
Drawing.
Yeah.
Yeah.
All right. So now the next thing is my points of interest. I have to look for my points of interest. So I would have drawn at my 50. My 50 is somewhere here. I would have drawn at my 50. I would have drawn at my 78, then 68.
61.89.
Yeah, these points. But you can add the rest and look out for reversals at those points. So these points
Yeah.
can serve as support and resistance. Now, one thing you need to know is one particular line can serve as both support and resistance.
Understands. Yeah.
Yeah. There, how will it do that? Remember that at the support, price is supposed to
Yeah.
is the lowest point. Then after that, price will bounce off it and go
Mhm.
higher. That's what support means, right?
Yeah. Yeah.
Yeah,
Yeah.
that's what support means. Then at
Yeah.
resistance, let me write something down. At support, price will bounce off it
Go higher.
and go higher. That's what support does. At resistance,
And then
price will
response,
bounce off it and go lower.
bounce off it and go lower.
Uh-huh. Now let's
Yeah.
let's take this point here. Let's see. Right here. Let's take this point here. Um, um, all right. Let's take this point. Let's take this point here. I hope you can see this point.
Mm-hmm. Mm-hmm.
I hope you can see that.
You can see.
Yeah. So price hit it, then went down. So it's serving as resistance, right?
Yeah.
Uh-huh. All right. I'm looking for a dual, down one which will do both. All right. Let's look at this
And
one
then
too.
that side.
Price hit it. It broke
And
through
right.
it.
And right.
Then we had a test. You see. So it was
Yeah.
like a support. At one point, it was like a support. Then at the same time, price bounced off it and went
It
lower.
became resistant
You see that?
and went
Yeah,
down.
it's
Yeah.
not a very
Yeah.
clear one, but there are instances that price will hit a particular price, then it will go up, then that same
Mm-hmm.
point will then push price down again. So it becomes a support and a resistance,
Downwards.
S and R at the same time. That first it served as a support.
All right.
Then once it broke through, price came back, tested it, then became what? A resistance. Do you get me?
No resistance.
Uh-huh.
Yeah.
So uh, uh, along the way, you will see some examples of that. That's a certain point will serve as a support. Then along the way, it will serve as a resistance too. That's same price. So we call it a
All
dual.
right.
Yeah, that's a support and a resistance at the same point. All right. So let's get back to doing what we had here. So remember my 50. Remember I told you when I'm using this, I use it to trade bounces. But if you are trading it as a bounce,
Yeah.
the break of this 50% here, you would have as a breakout,
Mm-hmm.
you would have sold here. And so I hope you can see what happened. Price went up again.
Yeah.
Rose very strongly.
Yeah.
I'm sure there was a news release. Probably this is the results of NFP. NFP. The NFP is non-farm payroll data.
Payroll.
Non-farm payroll.
Payroll data.
Yeah, it's an American data. Very important. It comes out at the I think at the beginning or so of every month. Many traders they trade of it, but
Okay.
one thing about this news is it's very volatile. When it comes out, you can have something like
Yeah.
this happening. That's it. Prices will push up,
Wow.
then can come down, or prices will go up and keep on going up. It's a very volatile news. That you can make a lot of money from it if you get it
All right.
right. You can make a lot of money.
Okay. All right.
Uh, so we'll get to the point where I'll teach you how to trade the news. But now let's deal with the beginning. So now we have 50%, right here.
Yeah.
Uh-huh. So there was a break, but I don't trade breakouts. I trade bounces. So I wait for it to pull back upwards. So once it pulled back upwards, I would have looked at this point here.
Rashid.
Yes,
Rashid.
yes.
But assuming you said you didn't have that data with you.
That data.
Your points, yeah, your points of interest are in the red line from the lowest to the highest points.
Yeah.
So I figured that's what you'd be using to project into the future.
Um. Yeah, yeah. I'm talking of this point and this point. This is what I use. These are the 2 points.
Yeah, yeah.
Yeah. I
So
had I
that's
had
what you have for now.
yeah, yeah. I had only these 2 points. But once you
Yeah.
draw it, you wait for price to get to
Okay,
those
okay,
points.
okay, okay.
You get me?
All right, all right,
It's
all right, all right.
the
Okay.
the expansion tools. So retracements. Yeah. Keep on confusing the
We're
people.
using the we're using the expansion.
Yeah. We're using the retracement tool. This is a retracement tool.
Retracement tool.
Yeah.
All right, all right.
The retracement tool is to it looks at 2 high points, and the idea is that those 2 high points will hold such a way that price will trade between these 2 points. But as it trades between these 2 points, there are points which are very important to
Okay.
price, such a way that when it gets to that point, it can break out or it can bounce off those points. You get the whole idea.
All right. I
Uh-huh.
do. I do.
Yeah. So for me, the 50% is very important. So right here or here, I would have looked at a possible buy.
All right.
Do you get it now? I only had
I
these
get
two
you. I get
points.
you.
These 2 points occurred in price. These 2 points occurred.
But then you're going to wait.
Yeah. I'll have
You'd
to
have
wait.
waited.
This is what I'll see on my
All right.
charts. This is
Yeah.
probably
Yeah.
what you see. The time that you decide to draw this is what you likely see.
Okay.
You see that? And once you draw that, you wait
Yeah.
for price to do something.
And then.
You wait for price to do that something, and it does. It keeps on falling. It keeps on falling. Then you start looking at the points that you look at: 50%, 61.8, 78.6. But you can add the rest and look for
All
what
right.
something to happen there.
Yeah.
Uh-huh.
Okay.
You get me? All right. So we
I
had a
do. I
bounce
do.
off. We had a bounce off here, or we had a slight breakthrough. This is a slight breakthrough. The prices pushed up.
Okay.
Uh-huh. So once prices pushed up, you'll be looking for entry. Let's zoom in and you see what happened. I hope you can see my zoom in.
Yeah, I can see.
Yeah. So this is the point. It had a breakthrough. Then this is the bounce off. My idea is that
Okay.
if I'm going to trade something and it's going to be risky, I would like to have my risk closer to home than
Yeah.
far away from me. So what I'll do is
From
I'll
home.
not wait. I'll not wait for price to
Yeah.
go further
Yeah.
up somewhere here before I buy. I'll rather buy at this point here. If I buy at this point, I know that my stop loss will likely be this line. Remember, I told you this point is like
Okay.
um is a support.
Yeah. Yeah.
Yeah, this line here is a support.
What? Yeah.
This one. The next
The
Fibonacci. Yeah,
61.89.
yeah. This yes, the 61.8, or even just below here. Remember the wick. So you can place your stop loss right at the wick or few pips below the wick, and that will be at this point here. This will be my stop loss.
All right.
I'll not wait for price to go up here. Then I'll now be looking this amount of loss. Let me clear this. So I'll now be
Okay.
looking this amount of loss. You get me? I'll rather have a smaller loss so that I can have a
Yeah.
bigger win. You get me? Smaller loss,
Okay.
bigger win.
All right.
The whole idea is that if I'm going to trade price, if I'm going to trade this market at this point here, my stop loss will still be here, this point here. If I'm going to trade it
All
at
right.
this point, my stop loss is going to be here. So why wait till price gets here before entering? I'll rather enter at this point. At the close of that candlestick,
Okay.
I'll rather
All right.
enter there. You get me? If I know that this point is going
All
to
right.
be my
I
stop
do.
loss, I'll rather like to enter at an early price. You get me? Let's look at the number of pips I'll be missing. If I enter
Yeah.
here, that's about 27 pips. You get me? And you can start doing your calculations depending on my lots
Pips.
and then depending on the number of the type of accounts I have. The 27 pips can be about $27, $270,
All right.
$2,700,
All right. Yeah.
$270,000. You see what I'm trying to say? If I know that this is going to be my stop
I
loss,
do. I do.
yeah, if this is going to be my stop loss, I don't need to wait for price to go higher before I enter. So I would say you should wait for a confirmation. Why wait for a
All right.
confirmation when I know that at this point here I'm going to enter? So why don't I enter at an early price? So yeah, the best place to enter
Okay.
will have been right at this point here. So if I enter there, I'm looking at a loss of, in case I lose that trade, my loss will be 63 pips, right? So I'm looking at a 63 pips loss.
Yeah.
63 pips.
All right.
And I'll start looking at my profit target. So I'm looking at at least 120 pips. I'm looking at somewhere like 120 pips. So once I determine that I'm looking for 120 pips,
Profit.
yeah. So here, 120 pips. That's right around here. But I'll not set it at exactly 120. I'll probably
Yeah.
set it at 110. You get me? Or
All right.
if I know that once price gets to somewhere 120 pips, the next step is this point here. Remember the Fibonacci. This one of the lines. You get me? This one of the lines.
Yeah. Yeah.
So I can set my take profit even at this
Yeah.
point here.
So you don't make it get there.
I don't.
I
Hello.
said you will make it get to the next. I said you make it get to the next Fibonacci point. You bring it down a little bit, as you said, leave something on the table.
Yeah. So probably,
Yeah.
yeah, you got me right. So probably 10 pips below it, somewhere here. 5 pips, 10
Yeah.
pips, 20 pips. Make your own calculation and determine where you want it. But once I have my
All right.
120 pips, what I'll do is I can decide to protect it. So I can shift my stop loss and shift my stop loss to somewhere here. Get it?
Okay.
Once price hits my 120
So
pips. So you see, if I did that, I can shift my stop loss here. Then the price, I hope you can see this red. Can you see this red
yeah.
candlestick? I hope you can see
Yeah,
that.
yeah, I can.
But
I can
you
see
see
it.
that before the red
Yeah.
candlestick
Yeah.
formed, prices pushed up. Prices pushed up a bit
Yeah.
before the
Yeah.
red candlestick.
By
Then
the
yeah,
wick.
the sellers pushed down. So that means I would have hit my take profit. Can you see that? Let me clear everything
Yeah, I
so I
do.
can see that. Let me zoom in. I hope you can see my zoom in. This is what we are looking at. You
Yeah,
see?
I can see it.
Yeah. So
So
that means
yeah.
at
That
least,
wick.
yeah, I would have been hit. My take profits would have been hit before prices were pushed down further. You see that? Do you see that? It
Yeah.
would have hit my take profits.
Yeah.
My stop loss would have been here.
I see, bro.
Yeah. My stop profit would have been here. But first of all, it hits my take profits, and I'm closed out of that deal. So even if I'm somewhere doing something,
Trade.
yeah, I would have come back
Yeah.
to see that, yeah, I made my take profit was hit before prices went down. You get me? But if you had placed your take profit right at
Yeah.
this point here, it never hit that point. You see that?
Yeah.
It never hit it.
So yeah.
So that's why it's good to shift it downwards. There are some cases that after it did this, it will start pushing downwards, and you come back and realize that, Charlie,
Oh, wow.
your let's say your
You lose
stop
all your
loss
money.
was still at this price here. It would have
Same.
come
Oh
back
my god.
and hit
Oh my
you
god.
after
Oh
making all
my
that profits,
god.
and you're
Oh
not
my
there.
god.
Just a few
Wow.
pips, a
Wow.
few
Wow.
pips to close you out. It did not do that. Then it came back and hit you out with a loss. I had a lot of
Wow.
those things when I
Wow.
started. It's very annoying,
Wow.
very painful sometimes.
I
But
know.
what can you can't look at
Well,
the
it's all
chart
part of the
24 hours.
process,
When you have
man.
lectures and all that,
Yeah.
you
Yeah,
cannot be looking at your charts.
exactly.
Yeah.
Oh my god. I'm sorry, man.
Don't worry. I'm
Sorry,
sure
man.
when you start, you probably have some of those. So you see that.
Definitely. Definitely.
I hope you can see that.
I'm looking forward to it.
No, don't get
Yeah,
too
yeah, I
greedy.
can
Don't
see.
get too greedy. Just take some profit. Take some profits along the way. When you start making a lot of money, then you can start. Uh,
I will.
yeah, you can start reducing the number of profits you take.
Risking
Yeah,
higher.
yeah, you can start risking
Soon,
higher,
soon.
or maybe the profits. If you like taking a lot of profits along the way, you start reducing that. There are some people they will not put their take profits here. You probably place it higher. You get me? Higher than this, and his stop loss,
Yeah,
he
yeah,
bring it to break even. That's you break even on this trade, and all this will still be money on the table. You not take all this money on the table.
yeah.
All this, all this money, you not take it because he's hoping the price will go higher. But you see what happened? It came down, then it hits him. So in this trade, he did not make any money. But if you're a
Mm,
beginner and you keep on having this kind of trades, it will hit your mentality.
letting it go.
Yeah, your psychology will be in trouble. I hope you get me. Your psychology will start giving you all kinds of troubles. That's you feel like, man, like the voice within you say this is not good, this is not good, this is not good. Then you start making all kinds of errors in your analysis. You become like a wounded dog. You see how a wounded dog behaves? Yeah. So that's how it is. So along the way, take some profits. There's no problem if you take. Hello, Hakim. Can you hear me? Hello.
Hello?
Yeah. It seems my connection dropped.
Yeah, I think
Yeah. All right. I'm sharing my screen again.
there was a reconnection.
Can you see my screen? Hello, Hakim. Hello. Hello, Hakim. Can you see my screen? Hello, Hakim. Hello.
Hello?
Yeah.
Yeah, I lost you for a while there.
Yeah. It seems that the connection is getting low. I'm sharing my screen again.
Yeah,
Yeah.
all right.
I've been warned that the internet connection is unstable.
Yeah, slow. Yeah, yeah, I saw myself.
All right.
Rashid,
Yes.
Rashid,
Yes.
I
Again.
got MetaTrader on my I
Yeah.
got MetaTrader on my tablet, but then I couldn't sign into FX Hot Forex.
Yeah.
Why? Why is that? I don't know. I was trying to access the chat on my tablet.
Um. when you go when you open the application, try and search for the hot forex
Yeah.
server. You get me? So you write in the hot forex server. The hot
All right.
forex
All right.
server is this. This is the hot forex server. This what we have. This is a hot forex server. That's on a demo account.
Okay. Okay.
This is what you have.
All right. All right.
Uh-huh.
Okay. I'll try that.
Yeah. So once you find that server, you can then put in your details. That's the login details.
We can continue. I'll try that later.
All right. All right. So uh, so take some profits.
Yeah.
There's no problem with taking some profits along the way. All right. So I hope you can
Yeah.
see this. This still a 50% line. So with this trade was a successful trade. We wait for the next one, another bounce. We had another one here. We could have taken this, but this one here, our profit.
See.
If you are still targeting this point here, you wouldn't have made it. I don't
Yeah.
think you drop
Yeah.
so
It's a
down.
minute of
Yeah,
profit.
but if you shifted your stop loss along the way as it went up, you shift your stop loss along the way, you would have gotten something
Yeah.
out of it. Then we had
Yeah.
another bounce here. This was another bounce we
The
could have
50.
taken.
Yeah.
Then since this point occurred here, this point could have been another resistance.
For you.
Yeah, for you. So you look at taking your profits here. Then we had a break here. You can't place your trade here. So we had
You
another
wait for
one.
confirmation.
So this point from support is now resistance. From support is now resistance. It was serving as a bounce earlier on for us. It was serving as a bounce. Now prices hit it, then it's now serving as a resistance. That's price will hit it and fall further. That's a 50%. Once price breaks it, it tries to go up, it fails, then it becomes a resistance. Then the next one,
Seen.
this was now the next point that we had here. You could have traded this, but in case you don't like the formation here, you can wait for another one. And we had another opportunity here.
Yeah.
You get me? So that's how you use Fibonacci tools.
The Fibonacci.
So once price keeps on dropping up to this point here, and you see we're almost at 100% retracement. Can you see this?
Yeah.
We have almost hit 100% retracement. So you start looking for a way to draw another one. So we'll start looking for on the charts here. We can see these points and this point here. You get me?
So you can use to draw another one.
Yeah.
Yeah.
So we'll delete this. We'll delete this point. It's either we take this highest point and this point, or we take this point and that point. Remember I said it's subjective. Do you remember? Yeah, it's subjective.
Yeah.
So
people can do anything they want.
Yeah. It's subjective. So in case we decided to draw from here to here, this is what we will have had. You get me? This is what we'll have had.
Yeah.
But someone will rather draw from here to that place. It's subjective. But once you draw, you look for those points of interest. So we have our 50. We have our 50 here. We have our 61.8 here. We have our 78.6 here. Those are my 3 points of interest, but you can add the rest.
Okay.
You can add these points.
You
can add these points. You can add these points. So once we have drawn this, we'll wait for price to do something. And here we had that. We had a breakthrough. Then we had a pullback. The price tried to break through again. It stopped short. Then it fell further. So we could have traded this as a bounce. Remember, I don't trade it as a breakout. I trade it as a bounce. Yeah. So once it pulled back here, back, my sell would have been here. And my stop loss probably at this line or just above it. So stop loss here or there. So I will not wait for price to go somewhere here. I'll enter fast. I'll enter somewhere here so that I can have a smaller loss and a bigger profit. You get me?
Profits.
Yeah, I don't wait for too long to enter. Yeah. I would like to enter with a smaller loss, 1R to somewhere like 3R. You get me? That's okay. 1 to 3. I'll not wait and end up having 1:2. The question is, even if I enter somewhere here, you see, I'm increasing my loss to get this. But why not enter here so that I can actually get something out of this market? Even if it from here it reverses and hits my stop loss, it's a good trade, right? My probably my loss would have been about 50 to 30 pips. And I was looking at making about 100 pips. So imagine if I win, if I keep on winning out of 6 trades, I win 4 of them and I lose 2 of them. You see, 4 times 3. Yeah, 4 times 3. That's 12. 12 against 2. You see that I'm growing my accounts. I hope you can see that. Yeah. I'm growing my account. That's I have 12R against 2R. So that's 1:6. That means I lose 1, I make 6. 6. For those 6 trades I took. You get the whole picture now. You get the whole picture. Whatever you do, you lose some money. You cannot say that.
Definitely.
Win forever.
Don't win everything.
Yeah, you can't win everything. Along the way, you make some losses, but just make sure that you make money from your losses. Take your losses to be like the cost of doing business. You get me? Take those losses to be like the cost of doing business. So that's a clear. Later on you can draw more of this support and resistance. I want us to go. Yeah.
You want us to do something more? Something again?
Yeah. This is just one. We have to do the other part.
All right, cool. But then just I had a little problem drawing my Fibonacci. It was just three lines shown on it.
Yeah. You have to add these values. This is how you add it. Once you have it drawn like this, you can right click it, or you can, for mine, I can double click into go to properties. But once you have the Fibo, you right click, go to properties. Yeah. Then go to Fibo levels.
Okay.
Yeah. Then now add the rest.
All right.
Yeah. All right. So from here you can add the rest. You can even change the colors. You see the style, all that. You can change them. The parameters, visualization. That's on which, when you go to different time frames, would you like to have it there? See, show on all time frames. So if I go to the high time frames, I also have it.
Okay.
But the best time frame.
But then
yeah.
No, continue.
The best time frame to draw this is the time frame on which you actually place the trade. So if I trade on 4-hour time frame, I like to draw it on 4-hour time frame. You get me?
Okay.
Yeah. If I trade on daily, I like to draw it on the daily chart. You see, on the daily chart, this is just this is very small for me to use. On a daily chart, I'll probably be looking at drawing it from this point here to this point, and now wait for price to go all that way. You get it? So based on your time frame, you draw it.
All right.
All right. You were going to ask a question.
I think you answered it. You answered it.
Yeah, yeah. So always look for on your chart what you can see. Look for the highest and the lowest. So you could have drawn it from here to here. Remember I told you it's subjective. It's highly subjective. You see, as soon as I draw it from there, this becomes my 50. This now my 50. I hope you see that this one it was a perfect bounce. Then this becomes my 61.8. So it's highly subjective. When you're drawing these ones, retracements, they are highly subjective.
All right.
You get me? They are highly subjective. Okay. Let's deal with how to use the other one, the expansion. How to use the expansion tools. There are lots of ways to use it, but we are still dealing with support and resistances. But I'll have to just teach you how to use the other one so that you can use the expansion to determine your take profits. You can use it your expansion to determine your take profits. You can also use the expansion to determine if you're in a downtrend or an uptrend, points that you can take your profits, points that you can also place your trades. All right, let's take this downtrend. I hope you can see this a downtrend. What we have here is a downtrend. I hope you can see that. We have a downtrend here.
Yeah, I can.
All right. So once we determine that we have a downtrend here, but the thing is, the downtrend will have occurred before we know that we are in a downtrend. But let's say we drew our retracement lines. We drew our retracement lines. Drew our retracement lines like this. And we were now looking for a sell situation. So we'll take out our expansion tools and place it from, you see, from one point, from the low to the high. Then what we have here,
from the high to the low.
Yeah, from this point to this point, that's from one low to that's, you look, when price goes down, it is likely to pull up a certain point.
Okay.
Yeah, so you are looking at from here to here. Then you now look for the third point. The third point is the pullback. This is what we call the pullback.
All right.
That's the pullback. This is a pullback. Or the retracement. Pullback or retracement. So that becomes our third point. So we have it to the third point, like this. Do you see this? So now
I can't see your mouse right now.
You cannot see my.
I didn't see your mouse for a while.
All right.
Can you show the third point again?
For them.
For the expansion.
All right. That's this point.
You were showing. Okay.
This point and this point. This is the main leg, and this is the pullback. This is the pullback. Pullback. This is the main leg, or the push down.
All right.
Should I continue?
Yeah, I'm with you.
All right. So once you have, so remember, for the expansion tools, you use it for a trending market. Yeah. You need to know that the market is trending before you can.
Trending one.
Yeah, you use it for a trending markets. All right. So once we determine those 3 points, well, now what we look out for is these points here: 1, 2, 3, 4. They become points where you
Okay.
can take profits. Do you get me?
Okay.
They become points where we can take profits. So if you place a sell, somewhere here, 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 the points that we're looking at taking profit is this point, or that point.
All right. All right.
And in respect to this one too, you always place your take profit a few pips
Above the
above,
line.
yeah, above the line.
All right.
One good thing about it is it gives you an idea where price is likely to bounce off, or where price is
Okay.
likely to stop. That's that if it's in a downtrend, where price is likely
Okay.
to stop, then have a pullback. I hope you see this point here. It showed us that this way is likely to have a
Yeah.
pullback. Even though we broke through it, we still respected it. We came up, and it showed us that here too, we respected it. We came up. It respected the same place again, or let's say it respected the last one, but not so adequately. It was a few pips above it. Then we
Okay.
had a pullback. I see this one
Mm.
is now is bigger than the rest. So you can say
Yeah.
that
Yeah.
once we had a break, you see, for a downtrend, we are looking at lower lows like this. This is a downtrend.
Yeah. Yeah.
That's you have this point here. Then this low here should not pass this point. This low here should not pass this point. This low here should not pass this. Oh, sorry. This low here should not pass this point. Hope you get me right.
Yeah, I do. I do.
That's a downtrend. That's how a downtrend looks like. So we're expecting price to not break through here. That's why some people traded this as a breakout. Remember when we
Okay.
equipped our retracements? Remember I told you this point here, we
Yeah.
could have traded this as a breakout. So you see, we had 3 things telling us this was a breakout. That's this point here. Once prices passed it, it became a breakout trade. Then also our retracement told us it was a breakout trade. Now our expansion told us it's also a breakout trade. So by using Fibonacci and support and resistance, you could have taken this as a breakout trade, right? But
Trade. All right.
once price moves up beyond that point, or beyond even the lowest point here, it tells us that we are no
Yeah.
more in a downtrend, but we are now looking at a possible uptrend.
Looking at an
Yeah, a possible
uptrend.
uptrend, but the downtrend has ended.
Okay.
I hope you have me. You are with me.
Yeah, I do.
So once we saw that, we could have taken this trade here, but I doubt I would have taken this trade. But I hope you have an idea of what we are doing here. That's you are
I
using it
understand.
to
I
determine
understand.
points you
Yeah.
can take profits. These were the points were advised to take profits. That's in case you sold out somewhere here, 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 here. These were the points you should be looking at to take profits.
Taking profits. All
Yeah,
right.
yeah.
All right.
So let's look at other ones that we could have used it for.
Hello.
Hello, yeah. I said let's look for points we could have used it for. So we always look for an uptrend or a downtrend. We need a trending market. This is a very good example. All right. So let's look at this. We had a push up, then a push down, and a push up. I hope you can see this. So you can see this. Hello, are you with me? Hello, Hakim. Hello, hello, Hakim.
Hello?
Yeah, are you
Yeah,
with me?
Rashid, I'm with you.
Yeah.
Yeah,
Since
yeah,
our
yeah. I
network
lost
is,
it though.
yeah, it dropped a bit.
I'm with you.
All right. I hope you can see me. Has
Yeah,
the
yeah.
video quality improved? I made some changes.
No, it's it's blurry.
The video quality.
Yeah,
Right.
okay. I think it's getting better. Maybe it's loading.
All right. If it's not good enough, I'll return it to the default settings. For the video sharing, there's a certain um,
It's,
tick box that when you tick that it improves video quality or something like that, video clip or all that. Uh, is it clear now?
it's still blurry though. No, it's still blurry.
All right. Let me see if I can return it to the previous settings. What about now?
Yeah, it's okay.
Yeah, it's back to the default settings.
It's okay now.
So
It's
yeah,
okay.
we saw
Yeah, it's
this,
okay.
right? We had this.
The uptrend.
We had this. So we assumed we're now in an uptrend, right? That's we had a low, price
Yeah.
pushed up, then we went down, and price went up. Uh-huh. If you always want to know how much of a retracement you are dealing with, just consider this move.
Mm-hmm.
This is a move up, right? The first move up. Then this is the move down from here all the way to here. So if you draw it and compare,
Yeah. Yeah.
how much of a retracement do you have? This like from 0 to 100. Then it pushed down all the way to a certain point. So this like about 70%, right? Hello? Hello, Akim.
Do you, Rashid?
All right. So this like a 70%
Hello?
retracement. Hello, yeah. Can you hear me?
I'm with you.
Yeah. So I'm saying that this like this move
Retracement.
here,
Yeah, yeah. I can
yeah, this move here is like 70% of this
hear
of the whole thing here. So that's how retracement is. That's
you. Mm-hmm.
it's about 70% retracement or 70% retracement of the initial move. All right. I'm trying to show you
Yeah.
what the whole thing about retracement and all that. So now that we know that
Okay.
we are dealing with a possible uptrend, we can whip out
Uptrend.
our we can bring out our expansion tool.
Expansion
Yeah. So you draw it from the
to
end to this point here to this point. The idea is that once we had this, the possible point where you have a retracement is one of these lines. So this is a possible retracement. This is a possible point of retracement. This is a possible point. This is a possible
retracement.
point. This is a possible point. I hope you can
Point
see
of
that.
retracement.
So this was where it retraced. This is a point where it retraced. Right. Then we went all the way to this point here. Now, once
Yeah.
we reach here, we'll now look for a point where we can enter the markets. So we miss in case we entered here, that was good for us, right? In case we entered here, that's very good. But in case
Mm-hmm.
you did not enter, you look for another point where you can enter. So we'll move
Hello?
our we'll move our retracement to the next level. This is the next point, right? Then the possible points are this. this and that. So we'll move up. This, I hope you can see this. These are the possible points of, hello Hakim. Can you hear me?
Now that the breakages have increased.
Wow.
Yeah, but then the breakages have increased.
Is it the video or the audio?
I think both of them.
Wow. Let me see. I have 3G connection here.
Hello?
Hello, yeah. What about, is it better now?
Okay. Yeah, it's good now. I'm good.
All right. All right. So I was talking about the retracements. We had the first one. We had the first one, right? Can you hear me?
Mm-hmm.
Yeah, we had the first one and we missed it.
Hear you.
Yeah, we missed this entry here. We missed it. That's if I was trading, like I'll miss this entry here.
Okay.
Then once we drew the second one, that's, remember, from the tip to this point, that's if this how the it moves, right? This is how it moves. So if you are going to draw your retracement, it's from here to here to here. Once that one is done, the next point is from here to here.
Push it forward.
You get me?
Yeah, I do.
But the idea is you want to buy. You get me? You want to buy. So once this one occurred here, we're supposed to buy along the way, here. We're supposed to buy. So all these points here are points that you can buy.
Yeah.
You see that? So for this one here, I did not buy. I was supposed to buy somewhere here. This would have been a very good place to buy. But you see this big candlestick, probably there was a big news release. And there's going to be a big news release, I wouldn't have traded. Or even if I was going to trade, I would have waited for the news to occur first. Can you hear me?
Okay. Yeah, I can hear you.
I would have waited for the news to occur first. Once the news occurred, this was a possible point for it to retrace. This another point, this another point, this another point. You get me? Then the last point. This is the last point here.
Hello?
Hello? Yeah. Hello, Hakim.
Yeah.
Hello, Hakim.
Yeah, I'm with you, bro.
All right. So once this occurred here, this would have been a good place to buy. Then I'll now be looking for the points of retracement. That's I know this leg here. I'm now looking for the highest, the next leg. Remember, the retracement starts from a certain point, goes up, goes to a certain point, and comes back. And I use it to know where I should take profits. So once I enter here, the next take profit will be this. The next take profit will be that. The next take profit will be here. Can you see that? Hello? Yeah. So in case
I'm with you, bro.
Yeah. In case
the lag is still there.
Oh, man.
Hello?
Yeah. Let's continue. So once I took profit here, once I took profit here at this point here.
Okay.
Once I took profit there, then I saw this retracement here. I could shift my my retracement tool upwards. The start point is here. I hope you see that. Let me clear all the drawings. Once let me change the color too, so that it will be a bit clear. Can you see the retracement tool?
Yeah. I can see it in black.
Yeah, the black one. Once I drew this, I knew that the next point of retracement would be this.
The Fibo 61.8.
Yeah, 61.8. The next, then after that, it will be this. After that, it will be this. You see that? So my take profit would have been here or here. But remember, once it reaches here, it started falling. So once it started falling, I would have known that this one has been respected. So it's time to take my profit.
Yeah, that's all.
Yeah, time to take your profit. So once you take your profit, you wait for a new one. So you can wait for a new one. Remember, you need to know that you are an uptrend or a downtrend. That's yeah. So once we're in an uptrend like this. At the beginning, we caught this right at the beginning, so we made some profit out of it. But once we started breaking, you see that once we started breaking those points, you know that we are now in a downtrend, right? But this one, we did not have any pullback. We did not have any pullback along the way that we could use. You see, this one, we had a pullback, a nice pullback that we could use to enter. That's anytime it pulls back, we look to enter and we'll set our take profits at the lines. But this one, you don't have any pullbacks. You see that? You don't have any pullbacks to help you. So this would have been difficult to trade unless you use another method. You get me? Probably use
probably
use another method to trade this. You see that? That's why you need to have a toolbox. If this does not work, this will work. That's how the market does. If I cannot use this in this market, I can use this in this market. And remember, the expansion is for what? Trending markets. You need to have a trend before you can use it. Trending markets. So in this case here, I cannot really use my expansion tool. But once I had this and I had this, I can take this to be like one big, you see that, one big move. Just like the move upwards like this. I can take
downtrend.
Yeah, that as a downtrend. So in case I took that as a downtrend, once I took that as a downtrend, I'll have this. Remember, from in a downtrend, this how I would have drawn it all the way to here. But as you can see, the market never went in that direction. I hope you can see that. Yeah, it never went in that direction. So I can't trade it using that.
I think the retracement tool would have been the best.
Yeah, the retracement tool would have helped here. All right. So let's look at this now.
Which one is that?
That's from this point here to this point. I'm looking at for a possible move upwards. That's once I saw these moves. I had the small moves upwards. I had the small moves upwards. I hope you can see that. Can you see this?
Okay.
Yeah. So in drawing this one to a subjective, right? Someone can place it right here, and someone can place it up to this point. So it's up to you where you want to place it. It's subjective. But I see this move to be very small. That's why I decided to place it from here to that.
Yeah. Okay.
Yeah. So once I did this, my entry in case I miss this entry here, I could have still bought
From
here.
far back. All right.
Then my take profit here, 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 here. Obviously that this were my possible take profits. 1, 2, 3, 4. So as the markets went, hello. Wow, I can feel it from my end too. It has started breaking up. Your voice is breaking up.
Rashid.
Yes.
I don't know what happened.
Hello,
The
Hakim.
application just closed for a while, but then it opened again. I'm with you now, no problem. Let's continue.
All right. Yeah. So this would have been our possible take profits. When you're looking from the past to the when you're analyzing the market, when everything has occurred this way, it's far cheaper.
Yeah, I know.
It's far
You
easier.
have
Let
to
me put it that
practice real
way.
time.
It's far easier.
You
But
have to
if you
practice
had
real
been
time.
if you had been at this point here and I tell you to buy at this point, you would have doubted my analysis. Even if I tell you to buy
Definitely.
here, you would have doubted my analysis. But you need to
Definitely.
like use the tool and build some kind of confidence in it. So that
Confidence,
you know
yeah.
that if you buy here, you can take profits here, here, or here. But you see that as you push your take profit further, you're leaving more money on the table. You get
On the
me?
table. All
Yeah.
right.
Because if I decide to take profit somewhere here, that means I'll be leaving all this money out. My retracement tools told me that the market can move all the way to this point before it will take a possible reversal.
Yeah.
And it's happened. You see, it pushed, even though it struggled for that's like 2 weeks.
Yeah.
In the span of 2 weeks, it struggled before it was able to reach there.
Wow.
But if you hold on, you can make that money. But if you don't hold on and you take your profit here, you leave some money on the table. And it's okay. Just take it to be like it's a deal that you made, but the deal was taking too long, so you decided to close it at an early price. So you went to more profit. It's good enough for you. So you rather wait for another new setup, right? You wait for a new setup. Right. So I have this. This was my first move. I can take this to be another move. This to be another move. You can see that it almost broke through. So someone would have said my downtrend has ended. But you see, it's all subjective. Someone will say since it never really broke through this point here, I can't call it to be an end of my uptrend.
Downtrend.
Yeah.
Uptrend, yeah.
You see, the question is, has my uptrend ended since the market pushed all the way up? Then it's almost broke through my last point of call. Remember, a perfect downtrend is like this. But as in life, things are not perfect. You get me right?
Yeah.
Things are not perfect. It's very difficult for you to see the market like this. You see it sometimes, but not all the time. The market can be like this. You get me? But someone also take this to be a downtrend, even though we have a break here. But it's looking at generally what is it doing? Are prices going down or going up?
All right.
Yeah. So it's very subjective. Things are subjective in the markets, just like in life. Everybody has an opinion. Everybody has an opinion. You bring a topic, someone says this, someone says that. That's how it is in the markets. I can analyze my charts, do everything right, and someone say my analysis is completely wrong. Do you get what I'm trying to say? Yeah. So it's
I get you. I get you.
Make up your mind on what you want, on what you believe or what you think works, then stick to it. And that's true practice. So if I take this point here, if I still take it to be an uptrend, that means I can still use the same tool, right? If I take the market to still be an uptrend, I can still take the same tool. And a drawing, someone can say I should start from here. Someone would rather say I should take this point and this point here. So if I decide to listen to that person, I'll have it like this. You get me? If I decide to listen to what I have, I'll take it from here. Then I'll now be looking at these points here. This, and that as my possible points of reversal. But we never see things to occur till they have occurred. Sorry, it happens before you see it. But the thing is, you need to trade it before it happens. You get me right? Yeah. So if I still believe that this is going to be an uptrend, I would have placed my trade along here. Along here would have been a good place to place your trend. But always try to make a decision earlier than later. Make a decision earlier, so that if you decide to even buy here, you can make your stop loss somewhere here. I hope you get me right.
All right.
Loss somewhere here. If I enter early, but if you enter here, see where your stop loss can be. I always like to put my stop loss after a swing. That's when the market moves like this. I like to put my stop loss around here.
Same.
I won't wait for the market to get somewhere here. Then I'll now be trying to buy here. Buy early. Buy somewhere here so that your stop loss can be small. If the market still goes this way, you get stopped out, no problem. You get me? So if you believe that this is going to be a market that moves up, buy early so that you can have a small stop loss to a bigger profit. So that if I buy here, you see my profit can be here. This is my first line. This can be my profit target. You get me? The next one will be this.
Yeah, I've made a lot.
Yeah, the next one will be that. The next one will be that.
Same.
I hope you see it. So
I understand.
If you are using this kind of tool, you should be looking for a trending market. You should look for a trending market to use this tool. All right. Now we have dealt with using Fibonacci tools for support and resistance. Then that's using the expansion tools, retracement tools. The next thing we'll talk about is that one is an indicator that you can add. You can download indicators on MetaTrader.
Okay.
Yeah. If you click on this, the terminal. If you click on the terminal, then you go to markets. If you click on markets, let's see. It's still coming. Why is it so slow?